Okay, this is my second entry of the day. I'll go over why in a moment, but I should have already been out, but here I am fumbling around with the screen recording software. I'm going to tighten this stop up now and see if we can't break through that high. Looks like it kind of wants to, but we are at the top of the channel on both the tick chart and the minute chart. I think I'm going to go ahead and get out right here if I can. I'm going to get out right here. Either I get stopped or I get... Here we go. And then I'll go over the reasons why. Okay, there we go.
Order canceled.
So 93 to 16. 77 tick trade. Let's see, I had my stop one tick below here. So what was that? That was 6. So I had a 10 tick stop on this one. So there we go. Made another $770 with the one contract with a 10 tick stop. Okay, so still risking $100, but making 7.7 reward to a 1 risk. Alright, so let's go over why I got in here. It was really just a little bit of a late entry. I should have been in down around here at about 14, so not too much difference, only a couple of ticks, but could have had a little bit less risk on this trade, but got in just a little bit late. Okay, let's delete everything off of this chart. This is the 432 tick, and then we'll draw trend channels, and you can see it bounces off right here. We don't have any divergence or anything, so I was waiting for a deeper pullback, and here we break through it. This is called a throw under. Okay, so we're breaking out of this uptrend channel, so you have a lot of novices selling right there. Alright, now what happens is when we break through that, we're actually pulling down to the 50% retracement, as you can see right here. Let me just delete all of the ones that are unnecessary, and we're left with just that 50. I'll delete that 272. Okay. So when we do that and we break through and we hit that 50, you can see we do that on a weak churn bar down into the low. Let me just load the volume per second. Okay, there's the volume per second. You can see that's the highest volume per second on that last bar down. So all of these contracts are traded at about 5 or 6 times the speed as on the previous bar. You can see we have very high volume per second, so we're kind of rushing down into that low, into that 50, and all that selling is being absorbed by the buying, which is why we have a weak churn bar showing that it's a high volume per range bar, and then the next bar turns back up on even higher volume and volume per range, which is why it's a strong churn, marked yellow, and that's where I buy, is after that turns up right there, and I'll show you why on the 1 minute and the faster tick chart. But before we do that, let's delete everything off of here. Okay, so not only is this area the throw over of that trend line, but it's also the previous area where we had a ton of volume come in right here. You can see that extreme spike in the volume. It's over the 3rd standard deviation band. It throws off that support line, that red line, from the low of the bar. We just barely break through this low, down to that support line, and then it turns up off of that. What else it is, from this high to this high, we get the auto line drawn from here, and then it breaks, and then the new auto line is drawn from right here, and it's the same slope from this low to this low as it is from this high to this high, and it's also the median line. You see how everything comes together at that low, and we're just barely taking out this low. Then we have a lot of volume come in on the way back up, and then it takes off. Now I get in there on the 1 minute, and let me just delete everything off the chart so we can start fresh. So we'll draw from high to high, and there you can see the median line, right where the auto line, that pink line, is intersecting that median line is where we turned up off of. And look at that big, huge churn bar at 200% the normal volume on bullish divergence. Let's draw back here from low to low, from the low here to here, and that gives us the lower median line right there. You see? This silver line, that's the lower median line. So it's where the median line from here intersects the lower median line from the uptrend channel. Everything comes together right there. And then when it turns up and out of that area, after that churn bar, signifying that demand is coming back in right there, obviously, and it turns back up, when I see that volume come in right here, then I get in just after the close of that bar on a limit order as it pulls back just a couple of ticks from the close. Okay, and then I put my stop just one tick behind this previous low here at 06. And then it takes off, and then my target is from the low here to the low here. There's the trajectory right here. Here's the 100%. I got out a little bit early. I should have been out right there on that bar, right where the median line intersects this ABCD line. Let me blow this up. I know this is kind of complex if you don't know anything about market geometry or volume analysis, but this is really what it's all about. Fine-tuning your entries, knowing what's happening in the market, why it's moving the way it's moving, why it's turning. Understanding the movement of the market is key to successful trading. So here everything comes together. You've got the median line, you've got the ABCD line, you've got the 100% right here. And it's all coming together at the second standard deviation of the VWAP, which is incredibly overbought on the day. I mean, this is almost a 100 tick move here. So we are incredibly overbought on the day. And if we looked at the daily chart, let me just show you what's happening quickly there. So here's the daily chart. And we've come down to this perfect spot on incredibly high volume for the daily chart. I mean, anything over 150 is really incredibly high on the daily. It's an extreme spike, it's a climax, and we're down to the lower median line and the fib confluence zone here, and we've pulled up off of that. So after such a big move down like this, we would expect to get some kind of an A, B, C, and we'll probably come up and hit this shadow line within the next few days, and then possibly come to new lows after that. Now we could, make some kind of a triangle. We could go sideways for a number of days. This could be a major low, and we could be going higher. But chances are we will make it back to at least the shadow line over the next couple of days. We'll definitely break this high. Okay, so that's what I was anticipating for some long trades today, which is one of the main reasons why I held, which is why multiple time frame analysis is so important. But I didn't want to confuse you starting off with, the top down like I usually do. I just wanted to show just a couple of basic charts and how really you could have only used those charts to have taken the trades that I did. But see, my analysis that I do favored longs, especially after such a strong up move in the pre-market. Okay, and then when we pull back down to the VWAP, yesterday's low on bullish divergence. I mean, that's a dead giveaway that we're going to make another leg higher that looks something like the previous leg. Okay, so not exactly rocket science here, but nonetheless, it is a matter of waiting for the area to be hit. Otherwise, you can attempt, along here, along there, along here, and you've taken 3 losses before you get that big winner. And by the time you get that big winner, you're really only making back money that you've previously lost. So that's one of the most important things, is being patient, waiting for that area to be hit. If it doesn't get hit, that's fine. You just don't take a trade. You don't try to force it, because when you do that, you end up losing money way more often than not. So let's come back to this 240 minute. Now on the daily chart, we're only using the RTH, the regular trading hour session. On this 240 minute chart, we're using the full overnight session, which is why you can see it actually came down and retraced to just below this low right here and down into the wick here. So we've made it back into that area where we had demand first come in, and now looks like we're getting something up and out of this over the next couple of days, and it might, do something like this. Who knows what, but chances are it will come back and break this high. Now I doubt it's going to do that today, but we already have a very large range on the day so far, but momentum is very strong in here right now. Look at the difference between, coming down, momentum slowing here, and then we get a very wide distance between the two dots here. And we do have bullish divergence between these two swings, because this swing low is slightly lower than this one, and this close is actually a little bit lower than this close. Okay, so back to the tick charts and the minute chart. Okay, it's looking a little bit messy now, but you can see what came together right here, where I should have been getting, this is where I should have exited, right here, or even right here on the next bar. We have both the channels coming together at R1. We've made an even steeper trajectory of this wave than the previous wave, because this is, remember, this is the CD line. This is the trajectory of that previous wave. When we come back and then go back into it, we actually meet that trajectory exactly at the 100%, and then it rolls over. So rather than getting out where I did, I should have just had my stop a little bit lower and then wait and see if it was going to make a push back up, and when it did, I would have been out on that bar right there. We have a churn with two back-to-back climax churn bars. It's a churn in the density, and then the relative volume is both back-to-back climax churn bars. So now that we've come back up, we've just tested that area again on an extreme churn bar. So we've run those stops, selling came back in, supplies coming back in, and it rolls back down. Now we have demand coming back in right here. Okay, so finally on the 144 tick, coming back and looking at this area, we actually had volume divergence there as well. So this is where the multiple time frame divergence came in. I should have talked about this first, but you can see on the 1 minute the bullish divergence there. Let me delete everything off the chart. The bullish divergence right here between these two swings that are pretty far apart, and then at the end of this swing down, we also have bullish divergence on that 144 tick. All right, so as we're coming down into this low at the close of this bar, we get the signal for the divergence right here. Okay, and that's after we get the divergence signals here. So waiting for the two time frames to line up, we would have gotten this signal in the 1 minute at the close of this bar, and then when I saw it turn back up here, I really should have bought market at the close of that bar, but I waited just a little bit more. I saw two more bars, and then one more, and then put a limit in right there with a stop just back here at 06, 10 tick stop. Okay, but I was waiting for that multiple time frame divergence. And of course, waiting to hit the major area on the market geometry where everything was coming together there, as you previously saw. And just to show the 15 minute quickly, remember with our first trade back here, long from here to here, we had drawn this trend channel from high to high, and then it finds the auto line, the auto trend channel line from this low, gave us the low here with a little bit of a throw under, and then also the low right here with a little bit of a throw under. So this was one more confirmation using a different time frame. It's a minute chart rather than a tick chart. We have market geometry coming together on both tick and minute, multiple time frames from different pivots, and everything's coming together right there. Okay, so just added confirmation that this is most likely going to be a low there. So if we look at that quickly on the 5 minute as well, that area, we would be looking at this bar right here. Okay, and that bar actually closes at 19, and then it does pull back. It pulls back to 14 right there. And I got filled at 16. Okay, so at the end here, at the end of this pullback, we also have a strong churn bar in the 5 minute. And that's even more of a confirmation. So that's why we use the multiple time frames, and that's right to the median line. You see? So that's why it's so important to have everything lining up and waiting for those areas, and then defining your exits by the previous moves. Naturally, we would be holding to the top of the channel, and I actually got out right in there. Okay? So that's what it's all about. Putting everything all together, waiting for those areas. Taken 2 trades today, both winners, and I am up $2,000 on the day. And I've traded 2 contracts on the first trade, 1 contract on the second, and I've risked $200. $100 on the first trade, $100 on the second trade, and that's it. So I've made $2,000, risking only $200. That's a very good day, but that's a typical day when you're trading this style of trading. All right, so we'll end it there. Just wanted to give some good examples as everything was lining up perfectly today. So just a really beautiful day trading crude oil.